Welcome back, everybody. It is March 12th, 2025, and today we had our second Bank of Canada announcement. I'm here again with Karen Garrett from Sea to Sky Mortgages to talk to you about what happened today. Karen, this is our seventh drop in a row, so I feel like we're kind of broken records. However, there were some interesting factors that happened in the last few weeks, so I'm going to let you take it away from here.
Okay, I'll try not to rant too much and I'll just try to stay on
Mini,
point.
mini rants are okay
Mini
today, I
rants.
think. Yeah.
Okay. As of about a week and a half ago, it was actually widely expected that the Bank of Canada would pause at this meeting. Ever since the Trump war has started and Canada continued to retaliate, which I think is amazing, we are now going to see most likely another drop again in April 16th when the next meeting is, but we definitely saw a quarter point today. If the Trump administration continues to keep the tariff war going for any length of time, even as short as a month, as long as 6 months or a year, we're most likely going to see another 1% to 1.5% drop by the end of 2025.
Wow.
The
Okay.
reason for this primarily is he's under this misguided notion that he can make up the economy and the lower taxes because he's going to put tariffs on imports that we export. And either Canada will crumble and lower their cost of goods before they hit the border, so that then they're embedded in the lower price by the taxes, and the tax base will then be they'll be able to create a savings for the U.S. and the economy will improve, or that they will create jobs and factories and create their own insular economy where they can't rely on anybody else for any of their products. But of course, this is so misguided on so many levels because Canada has a lot of minerals and a lot of export for steel and aluminum that they require on a daily basis, power, gas. We're one of the only places that produces the crude oil, us in Venezuela. But he has this misguided notion, and he has economists that are boosting his opinion. And until it becomes to a point that either the whole stock market is affected and people start actually rallying to change his position, I think it's going to stay on this course for a while. So what's going to happen for Canada in the meantime is we're all going to be negatively affected by it. Canada is a smaller economy in scale to the US. So because of that, we're going to see Canada affected quicker. Everything will happen in a ripple effect, and Canada will be affected sooner. So on our side of the border, we're going to see most likely going into recession as early as a month. Rates will come down. Now, that's good news on the side of there's a pent-up demand for buying properties, and there's enough people with enough pooled money post-COVID that they are waiting for this to kind of jump back in. And there's enough pent-up need for properties and rentals and things like that that they don't believe that the recession will affect the housing market. There's going to be buyers, regardless of prices, that are going to continue to want to buy. The advantage right now with the recession side of the economy is that rates will go down, which will cost less for the buyer to be able to afford the property. But it does not mean, according to what I've been reading recently, and as early as today, our Dr. Sherry Cooper, who's our Dominion lending economist, who has a very good podcast and also has on Facebook, and you can YouTube her meeting today. She doesn't think prices of housing is going to really be affected. She doesn't think they're going to come down that much. She thinks there's a pent-up demand and that we're going to see more buyers wanting to buy. Interestingly, I thought I'd just bring up a couple of points for us, is that since we've been speaking since June, that now with this latest drop, that we're now seeing $119 per every 100,000 that you've borrowed less per month. So it's significant now. So that's going to
That,
speak to the people borrowing.
that first meeting we ever had, you were like, it's only $16. It's not going to make
Yeah.
a difference.
Now it's
Well, yeah.
119.
Yeah.
And so, you know, that's going to ripple over to your side now. I think you know, up until this last week, we were kind of in a little slower start to the 2025, but we were doing okay. We were holding our own. Things were on the pace for that soft landing we talked about. Now they're saying it's going to be a hard landing. We're coming in hard. The Bank of Canada is going to struggle between needing to keep the inflation down, because as prices become more expensive in Canada, which they will,
Yeah.
then that's an inflationary position. Things are going to be more expensive. But Canada and Canadians are very quick to respond to cost of goods and stop buying. So instead of saying that cost of goods are going up and that's just the way it is, Canadians have responded better than all the G7 as we came out of the COVID inflation. We responded the best and fastest. And so there's a common belief that Canada will see inflationary position, but will spend less. So in that case, the Bank of Canada is going to have to see past the inflation and keep on pace with being able to keep us out of a major recession and be able to keep inflation active. So it's a two-sided. The Bank of Canada, Tiff Macklem, can't look at the inflationary numbers and say, okay, let's raise rates, because that would be counterintuitive to what's going on behind the scenes as everything, the cost of goods. So factories are going to close. We're going to see unemployment. We're going to see layoffs. People have already paused. That's the thing that's happened with this particular recessionary, we're on the cusp of it, is that we're all anticipating this now. So Canadians are already pulling back. Canadians are already stopping their spending. So the Bank of Canada has to address that first before they address the cost of goods in our bottom line every day. So it's a double-edged sword, because unfortunately we're going in two different directions with some of this that's going on in the moment. But primarily the Bank of Canada is going to have to address the fact that we're going to go into recession. Already there's been 43,000 factory jobs that have been lost in the US, but they're slower to feel this pinch. So here's I think we talked on this last time, we touched on this, but basically right now the US economy is still Trump positive. They're still thinking that at the bottom, their taxes are going to be less when they file their taxes, which, by the way, I'm not even sure any IRS are even working anymore. So I'm not sure who's going to be doing their taxes, but again, sorry, rant, but
it was a mini one.
yeah, mini rant. But you know, so you're going to see the taxes where people are thinking, oh, my tax refunds are going to be bigger, I'm going to get more money in my pocket. That isn't going to happen, but there are still a percentage of followers, if you will, who believe that this is still positive. This is positive news. It's going to hurt for a little while, but it's positive news. What's going to happen then is, with the Canadian fixed rates, we follow the Fed market, and the Fed market is still showing inflationary position on the US side. It's hedging down, and it will take about 3 to 6 months to really show that what his choices and that tariffs are not good for any economy will take a while. So there was some reference today in Dr. Sherry Cooper's message that back in 2018, when the first tariffs came around from Trump, that they actually affected the economy to the point that it was some ridiculous billions of dollars the economy was affected by tariffs. And after it took a while for it to work through the economy, but that it was basically a year of tariffs that didn't work. But people have short memories, and so we're going to actually wait now to see what happens in the long run. But it's going to affect everybody. Businesses are all reacting, as I said. There are suspensions in spending. There are suspensions in expanding operations. There are people who are being laid off. Part-time people are being told that they're not going full-time if they had been promised that. So we are already watching our purse strings.
So there's no point in raising it, so we don't need to worry about that. And like, speaking for myself and anybody who renewed into a variable, obviously that's been dropping. I renewed in August, so that's not even close to what it was back then.
You had good advice.
I did have good advice. Obviously not panicking and locking in at this point. Worst case scenario is it's staying the same, and then we're still going to see some dropping this year. So I've talked to quite a few people who are coming up now in the next 4 or 5 months. So it's going to be good for them.
Yeah, I think that the fixed rates are lagging. A lot of misconception, as we've covered before, that when the Bank of Canada drops rate, immediately the fixed rates drop. In fact, TD Bank dropped their rates on Friday. They had already raised their rates 3 times since January, so they actually were just retracting that inflation and the rate embedded in that. But they were anticipating the Bank of Canada coming down. Other banks didn't actually raise their rates in January, so they're not lowering their rates now. We're seeing the fixed rates still lagging quite a bit, and I feel that 3 months to 6 months is a time frame when you may want to consider looking at the fixed rates if in fact you were intending to do that. They obviously advise on a big scale that if you're taking the variable, that's where you stay with the variable and you ride it out and it's bumpy and all that things, because you can never time the market perfectly.
Yeah.
But my opinion isn't necessarily try and get the very bottom rate. It's just to get a comfortable rate that you're happy with that was better than it was 5 months ago.
Yeah.
And that will be the same. And I think that that is going to hold true by certainly the end of 2025. I believe the rates will be down 1/4 point, 1/2 point to where they are today. In a general sense, yes, I do think that will happen. There's a lot of uncertainty, obviously. I mean, it's a daily. So what's happened is before, when the tariffs were threatened, it was kind of looming. Now, because they're kind of almost daily threats. He's talking about steel and going to 100% put, 50%, whatever he's planning on that one, and he's going to 250% on dairy. Like, he's just spouting whatever he can, and the market is reacting, and he normally reacts to the market reacting. So when the Dow drops, he tends to kind of go, whoops, what am I doing here? I should pull back. Obviously, this is not fentanyl driven. This is not illegal aliens coming into the country from other sources. It's none of that. He ultimately wants our resources. He ultimately wants to have his own minerals, his own aluminum, his own steel. And I personally believe he wants to try and break the back of Canadian economy. And at that point, we'll come cap in hand and say, yes, please take us. There's never going to be that scenario. It's throwing the baby out with the bathwater, and he will definitely be held back from that. There's not, short of a war, a physical war, which will never happen either, that he really is just pie in the sky, that he keeps pushing. He's not going to buy Greenland. He's probably not going to have the Panama Canal. But at the moment in his brain, he thinks this is going to happen. And because of that, that is my personal belief as to what is his end game. He's trying to break our economy to the point that our dollar is so weak that the rest of the world doesn't see us as an investable country. And at that point, we will then concede and become the 51st state. And as long as the Emperor's New Clothes exists and he's sitting there naked and everyone's telling him his suit is amazing, he's going to keep going, right? Like, it's the Emperor's New Clothes. It's exactly that. He's literally sitting there buck naked and everyone's telling him his suit looks amazing on him. And until enough people start to go, no, you're actually not wearing any clothes. By the way, that until that happens, until the veil is literally lifted, he's going to keep going down this path. And I honestly believe that because we had Trudeau stepping down, and he saw the crack, like he saw they're vulnerable. I'm going to throw the cat amongst the pigeons right now. And I'm going to say that they're not really being led by anybody. And I'm going to say that they're not stable. I'm going to try and back Poilievre, but I'm also going to kind of say that that Carney is this and Carney's that. I'm going to throw all that in there. So Canadians are going to go, ooh, we want stability. We want the guy with no clothes on to lead our way. Like that's honestly what I think he thought. And, we're going to quickly, I think Mark Carney is going to call for an election sooner than later, because I believe a lot of people, even though they may not agree with all the what the Liberals have done, that they're going to believe that he's going to be strong, because he's a banker background. He's going to be able to come in from a finance position and say, these are the things we need to do. Poilievre is not great for the businessman and has not proven out that. So he may or may not be another strong representative for Canada. I think neither of them are going to back down they're going to be, strong for Canada one way or the other. And interestingly, side note is that when you have a bully situation, a bully needs two things. A bully needs an audience and they need a victim. and we're taking away us being a victim. And the world that's watching is actually not impressed with the bully. We just have to stay strong and be conservative in our process of spending right now. And that's going to cause the recession. It is going to happen. So just watch your pennies.
Okay.
And, and if that means buying a property because you put money aside and you can see the rent will still cover that, then that's great, because I don't think you should be buying a property today for it to turn and flip by tomorrow anyway. You're always supposed to be going in saying, I'm getting in and I love this and I bought it for all the right reasons. It's the right property at the right time and it's the right location and all those things that you do so well to show your clients. Nobody should be buying it going, well, we're in a recession today, I'm worried about tomorrow. If it covers itself today, hang on to it, because it's gonna turn around. It always has in all markets. We've always recovered and gotten better and stronger. And I've met so many people in my 25 years as a mortgage broker saying, yeah, I was waiting for that price to drop and now I'm out of the market.
Yeah.
So this might be the perfect time with the cash aside to do this on your side. And with the interest rates dropping, it's a good time to look at this, because we're not looking at an inflationary interest rate environment at the moment. So yeah, I feel like it's there's going to be bumps, but I don't think it's a long-term bump. I think the bully is going to realize that there's no longer a victim. When he says everything's up and everything's rosy, it's those same people who tell him he looks great naked. Like it's not. I'm getting all lined up now. Yeah, so it's nuts.
Okay. I feel like I should rein this back in.
Oh my God, I'm gonna go out to the pool now and go, blah, blah, blah.
You need to go have a margarita and a little extra one for the rest of us who are in snow and whatever else.
Yes. On April 16th, we're going to have another similar conversation. Hopefully it's settled down, but I do think, and Sherry thinks the next meeting's a given that it's going to be a quarter point. And it's just so much instability right now that nothing is going to band-aid that for the next month. So we're going to see, another drop. We're going to go into not a mild recession anymore. It's going to be a full-blown recession. But we come out of them. We always do. We always come out stronger. And I think there's a lot of positive here that's happening for Canada because of this. We're starting to look across the country and we're looking at our provinces as our supply chains. And that's positive. That's been something that's been probably kicked around for the last 15 years and no one's ever done anything about it. And now suddenly the Liberals are being forced into a corner, and amazingly so, that it's going to probably work out to be a better thing. Will that compensate enough to what our exports are? No, because economy of scale, right? We only have 43 million people in Canada and 360 million in the US, or whatever those numbers are. Economy of scale, we're going to not be able to compensate completely, but we're going to be able to survive with that lifeboat because of it. Because this is going to be an attrition. We're going to need some time to ride this out. So anything that helps that, 100%.
Okay. So pinch your pennies, support your local and Canadian businesses.
Yeah.
Those are the takeaways, and hold on tight.
Yeah, put your hat on. It's going to be a rough ride.
We'll come through it. Keep your hands and legs inside the vehicle.
Yeah. And just let's all laugh at the emperor who thinks he's got new clothes on.
They're so nice. You're going to go enjoy a poolside drink. We're going to reconvene on April 16th and just see what happens between now and then.
Yep. All right. Well, I look forward to seeing you again, sweetie.
You too. Enjoy your week. Thank you.
Bye. Bye.